I'd like to welcome everyone in our audience today. We are very grateful that you have chosen to share some of your busy day with us. We know your time is valuable, and we will honor that today with what I'm confident will be an engaging discussion. Once again, our topic today is driving success with data-driven strategies and the latest technologies customers need. And my name is Mike Sisk. I'm a contributing editor at American Banker. I will be your moderator today, and my articles have also appeared in Barron's, Greenstreet Business Inc., Institutional Investor, Strategy and Business, and Worth. And I am very, very pleased to introduce our two speakers today. Rick Foresta serves as the Senior Vice President for the Modern Banking Platform Division at FIS, a global leader in financial services technology. In this role, Rick is responsible for the vision, strategic planning, growth, and performance of FIS's modernized core banking platform. Prior to joining FIS, he was the CIO/CTO Consulting Services Practice Leader for Ernst & Young's Technology Solutions Delivery Team, where he was focused on enterprise-level business and technology transformation initiatives in the U.S. consumer banking sector. Rick also has held managerial positions at Wachovia Bank and First Union National Bank. And we are very pleased to have Rick with us here today. And joining him is Richard Bishop. Richard is Precisely's SVP of Financial Services. He joined Cedar CX in 2005 as Client Service Delivery Director, overseeing all aspects of ongoing service delivery and partner management with FIS, one of the world's largest financial services providers. In 2012, Richard left Cedar CX to join FIS as a managing director, guiding relationships with large financial institutions such as TIAA-CREF, Barclays, Sallie Mae, BB&T, Nationwide, and Ameriprise. In 2015, Richard returned to Cedar CX to manage the FIS Cedar CX partnership and to lead the organization's sales and business development team within financial services and mortgage. And then Cedar CX was acquired by Precisely in 2021, and that brings Richard to Precisely. So also delighted to have Richard here today as well. Just before we jump into things, quick housekeeping notes, something mentioned in that little introductory video. We do have time at the end for Q&A. Usually we set aside 10 or 15 minutes. You don't have to wait until the end to put your question into the queue. You can do that throughout the hour, and we encourage you to get that question in there. If for some reason we don't get to a question you've asked today, if we run out of time, we'll definitely follow up after the program. So please ask away. We very much want to hear from you. And we do have, I think, one poll today, and I encourage 100% participation. We do share the results live with everyone, and it's a great way for everyone to see where other folks stand on the issue we've come together to discuss. So if you can weigh in on that poll, that would be fantastic. And with that, I think I am done with my little opening spiel, and I would like to officially turn things over to Rick to get the ball rolling. Rick, the floor is yours.
Thanks, Mike. Appreciate it. And for folks that remember First Union, you probably know how old I am. So definitely been around for a while. And one of the things I thought would be an interesting way to kick off the conversation is to talk really about how customers' needs are evolving and how banking customers are being served today, and more how they want to be served. And so we talk a little bit less about product, and while product is still a core aspect of what we do from a technology perspective, it's really enabling the journey. And the journey starts with, could be first account out of high school, whether or not you're trying to save for a car, go to college, whatever the case may be. Data and insights around that data is key to be able to unlock some of the offerings and really service that banks need to provide. And one of the things that we've been able to think about at FIS and how we're trying to enable these types of solutions and journeys in the market is really thinking about our platforms from a modern architecture perspective. You'll hear a lot, people talk around ecosystems, and ecosystem is really to articulate the fact that there's no one system or one solution that's going to bring the full breadth of services to clients. And so most of our next-gen solutions and how banks are thinking about modern platforms need to be able to provide an ecosystem of solutions together, and that's from an integration perspective as well as data point of view. Another key aspect, product innovation and being able to rapidly change product attributes to meet our customers' demands, whether it's through pricing or whether it's through fees or whether it's to communications and disclosures, data behind those products driving those insights is definitely something that helps banks with adoption of products in the market. Composable solutions, it's really a fancy word for components, pieces, and parts. Similar to having an ecosystem provider, modern platforms are bringing together best of breed software, both internally to infrastructure and platforms, as well as externally. And so as we think about next gen technology and being able to have solutions that are enabling data and data insights, these aspects become fundamental for what Richard's going to talk about here in a few minutes.
Hey, Rick, what are some inhibitors that banks are seeing when adopting next-gen platforms?
Yeah, it's a journey, and one of the things that's pretty difficult for legacy banks is to unwrap and unwind themselves from 20, 30, 40 years of customizations and point-to-point interfaces and data that's been defined between solutions that really has no context outside of being able to connect systems together. And so when you start putting in, modern thoughts or with regard to real-time integration or new platforms, all of that legacy technology has to be unwrapped or unwound. And so that's really slows the pace of adoption down from a next-gen platform perspective. Kind of leads me to this point here. I definitely need to think about starting simple. Don't have to take the big bang approach, as many of us have been around for years. Big bang means a lot more things than and generally it means something's going to blow up. And so really taking a thoughtful approach to how solutions are implemented is key. Digital has become the core of everything we do. I mean, the reality is, if you're not thinking about this guy in your banking journey, you're not thinking about banking correctly. I mean, generations now, they think first about how they're going to interact with their bank by the phone. I have a 20-year-old daughter who every day asks me, do I ever need to go into a bank? And I'm not exactly sure what you do, Dad. So, fundamentally, the market is changing, and being digitally native is key. Interoperability is fundamentally what I talked about at the beginning. You have to be able to bring systems together in a cohesive manner and be able to bring solutions to bear end to end for customers to be able to get what they're wanting and expecting. Comprehensive. The piece that I like about what we're doing is we're able to bring capabilities together from a variety of different fronts. And you think about fraud and identity management. You think about all of the onboarding aspects that customers need to go through with KYC and AML. Disclosures and communication information that we'll talk about here in a minute. And banks aren't really simply looking for a system. They're looking for an end-to-end comprehensive solution. And then fast. Banks are moving. While banks are moving slow, technology is moving fast. You have to be able to have some degree of being able to keep up in the market. And if you're not able to do that, you're probably going to be left behind. And so as we just kind of think about some of the principles that next-gen platforms provide to be able to provide an open architecture for data availability and insights and decisions, having this foundational core components in place are pretty key.
Hey, Rick, I'm kind of curious, are there any good kind of example success stories that you've seen implementing next-gen platforms?
One of the places that we've had a lot of success and is really digital bank stand-ups that aren't inhibited by legacy technology, and being able to launch in the market with a full suite of banking products, soup to nuts, without being tied down to legacy platforms. And so the quickest adoption that we've had from a modern banking platform perspective is our ability to stand up a bank from an online account opening in through servicing across a variety of retail products fairly quickly. I'm sure most banks would like to move faster if they can, but that's been able to exercise the technology, have a proof of technology that banks can build on, and now what we're actually seeing is the adoption and the evolution towards those frameworks and moving the legacy customers into those digital assets from a banking perspective. Really feels like the pace of adoption from a modern banking platform is beginning to accelerate. Just a couple of thoughts here, kind of repeating a few things, but some of the aspects of the architecture when I talk about next gen banking and modern banking. APIs, everybody likes to talk about APIs and know how great they make the world, but at the end of the day, it's integration and simplification of integration. Not seeing huge files, data files get passed end of day from systems to systems in a batch context anymore. It's APIs that allow specific data for specific needs, for specific transactions, to be able to enable a digital platform, or a digital front end, or a card payment in the back end, or a communication platform, to be able to share insights from a communication standpoint, is a pretty key aspect of it. I talked about the partner ecosystem early along the way, and obviously data and the availability of data to constituents both upstream and downstream of the core platform is a key tenet of the solution as well. A big aspect that we find fundamental and table stakes in the core platform space is being cloud first. And so, there's a hybrid strategy in the market with regard to cloud adoption. And, we as a technology provider have to be able to, whether it's public cloud, private cloud, on-prem, hosted, whatever the case may be, we have to have, cloud first as part of our architecture as well. So these are just some of the key aspects that we find fundamental for from a next-gen platform perspective. And ultimately, the goal for us is to be able to provide data and experiences to upstream and downstream partners like Richard is getting ready to talk through. So I'm going to turn it over to Richard right now, but I just wanted to lay the foundation from a technology perspective on how we think about next-gen platforms and our modern banking technology.
Yeah, thanks, Rick. I think some of the key points around simplicity and speed to market and modernization, I think, are right in line with the next few slides here. And this is some research that we did through Corinium. And it was just at the end of last year, and talked a lot about the customer experience and how CX executives are overcoming them, how they're working through them, and how data is driving that next gen experiences. So as many of us know, there's a lot of data in legacy systems, a lot of data in new systems, et cetera, and that can be a big challenge. To Rick's point on, I think, slide 2, the fundamental challenge can be leveraging the data across the ecosystem, whether it's a new core banking system, maybe it's a legacy lending system, maybe it's other systems, maybe it's collections on the lending side, maybe card, et cetera. So there's kind of this maturity challenge too that kind of plays into this as well that this research will speak to. So like Rick had mentioned, data is fundamental to this driving the behavior, getting insights into what's happening with customers, simplifying things. So if systems are not, integrated from a data perspective, obviously that can add a lot of complexity. Being able to test and learn, finding out, okay, what are customers doing across the journey? I mean, Rick mentioned that, right? There's a journey to the experience, and no matter what type of experience a customer pops into, whether it's a bank, or whether it's Amazon or Uber, or any of those common examples, they kind of expect that real-time experience, leveraging data. They expect you to know them. They expect you to, no matter the path, whether it's the happy path or whether it's the, complicated path through exceptions and issues and disputes and things like that come up, they expect kind of the same level of service. And ultimately, that's what everybody demands. And they don't necessarily really care. They're dealing with a bank versus maybe a fintech. So obviously, simplifying how customers interact, how to anticipate, what's happening with the customer, helping them find information very quickly, and being able to, provide next best action. And ultimately, why does this all matter? Yeah, must be able to maximize the value of the customer, the relationship, reduce the friction around the businesses. We got some stats on that in a minute around, 94% of customers who have a low effort customer experience report obviously an intention to repurchase. Obviously, the corollary to that is a much lower percentage if there are issues, or high effort are likely to not repurchase. So there's a lot of challenges around the data, and a lot of challenges around leveraging it across this ecosystem that continues to evolve. Like Rick said, technology continues to evolve very quickly, and organizations tend to be, I think, on a kind of a different paradigm when it comes to different levels of maturity across their ecosystem. They might be more mature in deposits, they might be more mature in lending, or vice versa. They may be more mature on the digital front end. So there's this kind of inconsistency that makes it hard to manage across that ecosystem related to the foundation of data. So this is some more research just digging down a little bit deeper that, siloed data, like I mentioned, siloed communication systems can be, really difficult from, a management perspective, not only from a data perspective, but from an integration perspective, because typically what happens with communication systems is organizations will, go tackle a use case. They need, a mobile solution, they need SMS or they need email or what have you. It doesn't really matter what the use case is, but they typically go off and at a line of business, oftentimes will kind of, go off in one direction. Other businesses might go off in other directions, given the technology that they have at their disposal through other providers or et cetera. So one of the big challenges that we see here is that these siloed and uncoordinated communications are really preventing them from delivering that seamless experience across, their ecosystem, from deposits to lending, on and on. And only 12% of the survey participants have integrated or fully integrated their communications into their CRM. So ultimately, you got to disconnect not only from just a consistency perspective across lines of business, but from a servicing perspective. So when you think of, hey, call center activity that's getting driven by a poor communication, I'll give you a real crisp use case that was very personal to me. Took a picture of my State Farm check. I had a house claim due to a leak in my upstairs master bath. So that check came in and I took a picture of it and submitted it to my bank. About 2 days later, they said, hey, we rejected your deposit. And they gave me 3 reasons. That is one of the 3 reasons. They weren't specific, but they gave me at least some reasoning. 1, they don't accept traveler's checks, which I was a little puzzled. 2, they don't accept money order checks or money orders. And 3, they don't check cashier's checks. And I'm like, well, it's none of those. It says, I had my insurance company, the largest insurance company in the United States, on the front of it. So I called the call center and asked them some questions about it and said, hey, I got this alert. The first question that the rep asked me was, or the agent asked me was, can you read me the alert? And I'm like, well, it came from you. Like, yeah, we don't have access to that. We can see that it went out, but we don't have access to actually what was communicated to you. So total disconnect around that, very siloed, because, the other types of communications that I get from my bank, they can't see, because I asked, naturally knowing a little bit about this business, I dug in a little bit more and said, well, can you see my letters that come out or my documents? Oh, sure. Yeah, we have access to that. But the alerts are kind of a blind spot. So that's an example where kind of the solid nature of kind of how communications or how technology is bought over the years, typically based on very specific use cases, don't necessarily coordinate across the ecosystem and the experience from an end-to-end customer journey perspective. If you look at completeness, this is something we spend a lot of time with, that this fragmentation I talked about in the prior slides really undermines their digital presence. So what happens oftentimes is we see there's a focus on core system, evolution, core system transformation, et cetera, digital experience transformations. But what oftentimes gets left behind and what becomes a big problem and basically ultimately undermines their initiatives is there's a lot of types of communications that kick out of these experiences. Maybe it's an alert, like I just mentioned, from a remote deposit capture system, or maybe it's another ancillary systems about a fund transfer or a wire, or maybe it's a bill pay transaction, or maybe it's just a core communication. So there's all these kind of point solutions, fragmentation around the edges that kind of affect this experience and ultimately hinders that progress. There's a lot of one-off application builds, a lot of hard-coded processes, not a lot of control, poor economics because typically they're antiquated or legacy, and it's an older kind of paradigm. So more modern communication environments have more flexibility. So, we talk about speed to market. I mean, Rick mentioned fast in his slides. I think that is a key aspect of, when you're talking about speed to market, you're talking about, product and pricing evolution, trying to get that done very quickly and being able to adjust, especially given the market changes that are going on. The slowest kind of car in that train is going to hold up the whole strategy. And that typically can be the communication. So if they're very fragmented, like on the left here, there's not a lot of speed to market, which can be enabled through a low code environment over here on the right. So, and also to integrating these experiences across the use cases, like I mentioned, whether you're dealing with an alert, whether you're dealing with maybe an email, SMS, or mobile communication, or traditional documents, that can have a lot of benefits too across this ecosystem. So that no matter what the customer is getting, it looks a lot more consistently from a CX perspective. And obviously, there's some efficiencies that can be gained from this by retiring old systems, redeploying resources, et cetera. So I think there's a lot of opportunities here still to be had. All right, we're going to get to the poll, so I'll turn it back over to Mike to kind of drive the poll here. So, Mike, do you want to drive through this?
Excellent. Yep. Thanks, Richard. Happy to jump in here. So everyone, yes, as promised, our first and only poll, and I'm just going to read through the question and the different answers here, and then that should give everyone enough time to make their selection. So what percentage of customers say they would switch banks if communications don't meet expectations? And it's 0 to 20%, 20 to 40%, 40 to 60, 60 to 80, or 80 to 100. So I'm going to leave this open and give folks some time to answer. But in the meantime, let me ask Richard. So, what kinds of operational issues are causing roadblocks in implementing an integrated communication strategy?
Yeah, I think the common operational issues we see are, one, there's a lot of redundant content across the types of use cases I mentioned, so that can be an issue from an inconsistency perspective. And then that leads to the next things around inconsistency, which kind of goes back to my use case I mentioned with my bank and my remote deposit check deposit, is, making a change to a communication can be very painful. So something as simple as, a rate change that happens upstream in the core system that has to have some disclosure change downstream in the communication, can hold everything up, like I mentioned there. And the change management aspect is a big hindrance. So because typically, like I mentioned in my slides there, the little bubble chart there that has all the fragmentation, is they might have to change that in multiple places. And typically they do. So they might have to change it in the document space, they might have to change it in the alert space. And then they might be dealing with different providers internally or externally. And that becomes, obviously a project that requires code and testing and on and on and on. Everyone knows those types of, technology cadences. And ultimately, it just holds everything up. So for me, my perspective is it could be a real challenge from a change management perspective, just kind of working through that paradigm because of all the fragmentation and the different technology providers. And they're not designed together. They're not designed to be implemented together, and they're not designed to evolve together. So that can be a really big challenge.
Excellent. Thank you. All right, let me go ahead and I've got a nice participation here. Let me share the results. And so, all right, we got 36% said 40 to 60%, another 32% said 20 to 40%. Again, what percentage of customers say they would switch banks if communications don't meet expectations? So excellent. Thank you for sharing those results here. And Richard, what do you think of these results? Kind of in line with what you were expecting?
Well, yeah, actually, to the next slide's point, based on some of the surveying, 63% would switch banks if communications don't meet the expectations. And then on the right side, this kind of gets to my comment a little bit about, accessibility and real time and the Amazon-like, Uber-like experiences that everybody expects, that 81% would consider switching a bank that offers anytime, anywhere accessibility. So again, there's a lot of loyalty and attrition issues. As a follow-up, we can share some of this, some more detail to this content. But really, that's a big risk factor from our perspective and our experience.
Mm-hmm. So which systems do you integrate with for personalizing communications?
Yeah, so there's a lot of systems in the mix here, and this chart here illustrates the point I think pretty well. Mike, I think, there's a lot of systems that get, I think, left behind. So, an organization might procure a, bill pay system. They might procure, like I mentioned in my prior comments, a remote deposit capture system, a debit card system, deposits, lending, online banking, on and on and on. So these are the types of systems typically that can, that are typically producing a communication event, as we call it. And then in the middle here, you have, alerts. You've got the various use cases, whether it's a push notification, whether it's an email, an SMS, whether it's a document, a form, whether it's a campaign. There's a whole host of use cases. And then on the right here, then you got to integrate with the channels across all this. So it becomes, a pretty big spaghetti mess. So what we found, with these various systems that require integration or producing communications, there's an opportunity to consolidate this into a unified way or unified funnel. And some stats over here based on the Ceridian research I mentioned earlier is obviously there's a lot of room for improvement. They 6.7% or 67% identify room for improvement in these experiences. So we see a lot of issues around just the experience. And then, like I mentioned, the operational pain of, speed to market. So changes take typically 90 days to make a change. So for the folks in the audience have had experience with this. They know the pain, and when something changes, oftentimes the conversation is how do we avoid the change because it takes too long versus how do we enable the change to be done faster. So there's a lot of opportunities here that this research kind of proves out based on our experience as well. And then there's a new way to obviously to address this. We've had a lot of experience, and Rick had mentioned, with digital banks and things in those types of environments. Where you've got an opportunity to have an integrated customer engagement platform, which solves a lot of the legacy problems I mentioned throughout the presentation from a data perspective, from a use case perspective, from a triggering perspective, that there can be an integrated, experience from the various, systems over here on the left through real-time APIs, through a unified engagement platform across the use cases here, and then across the channels over to the right here, whether you're dealing with a mobile channel, you're dealing with a traditional, print channel, where you're dealing with a portal presentation, call center agent, chat, video, SMS, email, etc. I think there's a lot of opportunities here to do just that. And based on some of the experiences I had with directly consulting with the various financial institutions that we support, I've seen this come to fruition, really, really well, where there's a lot of opportunity. And frankly, what we hear oftentimes is organizations didn't know there was a better way to do it. They just basically struggle because they don't know. There's an awareness issue, I think, that we have collectively here across this kind of ecosystem and this experience. So on that, that is my last slide. So I'll turn it back to Mike to help moderate some Q&A.
Excellent. Thank you, Richard. And so everyone in the audience, if you've got a question on your mind, now would definitely be the moment to get that in the queue. But there's some good ones in here already, so let's just jump right in. So Richard, let me ask you this to start off. So what use cases in financial services do you see the best results?
Real time has become I think a particularly hot area in the last probably 2 to 3 years. And I'll share some stats I think that would be very interesting to the folks in the audience. When you think of real time, a lot of people are talking about, we got to get to real time. What does that really mean? So when you start thinking about the, transactional nature of a lot of the communications that come out of, deposit account, checking account, money markets, it doesn't really matter what the product is. A lot of those are still typically document based. So organizations have sometimes tackled the statement as kind of the big win for getting the statement online, which really just drives them to an experience that they have to kind of work for versus pushing the information to them. So where we've seen a lot of success and a lot of, kind of surprise from the financial institutions on what they can actually do is, when you start thinking about transactional communications, such as like maybe funding letters or welcome kits and things like that, that traditionally are either put in the mail or at best put up on a PDF and then someone sent a notification, they have something to look at online. Those have shifted significantly to real-time alerts through email, SMS, push, and in-app notifications. So we've seen that happen very quickly in the last 2 to 3 years. And the stat that I have is, the most modern of the banks on our platform collectively with FIS and Precisely are close to 90% real-time with those types of communications. So what that means is all those transactional communications look a lot like there are other products that they're getting that are much more modern, and their experiences around Amazon and Uber and those ones I mentioned. So I've seen those have really, really good results, better engagement, NPS driven, things like that. So, that's my 2 cents on this one.
Fantastic. Thank you, Richard. All right. Let's see. Next question here. So what would you say is the biggest benefit to implementing an enterprise communication platform? And let me throw that to Richard first, but Rick, don't be shy. If you want to jump in later, please do so.
Yeah, no, thanks. Cost save is certainly a component. We're working collectively with a very large, FI, and there's easily from a pretty quick assessment, a $20 million ROI over 5 years. So pretty significant. And we believe there's more. I think that's just a high level estimate that we did on this. So cost save certainly a component. Rationalizing, the current state, I think will identify a lot of opportunities, whether it's manual issues, manual communications, consolidating technology, resource drains and resource expense, I think obviously can be, also part of that ROI puzzle. But, Rick and I work pretty closely together on some of these initiatives. So Rick, I'm curious your perspective around any of this, either the use case question around, best results or, around the biggest benefits of, consolidation generally, probably too.
Yeah, I think I'd double down on quality and consistency. There's hidden costs there, but there's also hidden risks there with regard to communication that goes out maybe in one channel different from another. If you've got disparate sources that you've not been able to keep in sync from an operational standpoint, you do run some risk in how your customers are viewing you. So I'd say, from a quality and consistency perspective, I see those as the largest benefits. It's easy to talk about one-stop shop, and Richard, you and I have talked about it, and some of the things that we're working together on to be able to have a single point of integration versus multiple. Keeps technology operational costs down as well. So I think that's where I would go with regard to some of the benefits.
Yeah, I think the risk angle, Rick, that's a good point. I think some of the risks that I see when typically doing these assessments and we're going through the current state analysis and where the challenges are, it's almost common pretty much everywhere we go where, just having control of the communications, Rick, to your point around different sources for the communications adds risk because of inconsistency, quality, et cetera. One of the areas I see all the time is just, content is inconsistent. So one thing is saying one thing, another thing is saying another. And the other area I see where there's a lot of risk, if I ask a simple question about, like, change management was one of my examples I used on, a large benefit of, a platform like this. And I'll ask a bank, how do you manage change? How do you manage the testing process? How do you manage the approval process? Where do you have a record of that information? And as you'd imagine, given all the fragmentation discussions I've had thus far, it's really all over the place. And sometimes it's not even there. So if I ask, can you really truly prove who approved what? Oftentimes they're digging through ticketing systems or email systems saying, okay, this person signed off in compliance, this person signed off in legal, this person signed off in the business. But there's not a way that's visible online to see that. And then, the testing process and that whole back and forth process with, code and testing and things like that is difficult too as well. So, Rick, I think your risk comment is spot on. I thought I would unpack that just a little bit and add some more context there.
Sure.
Excellent. Here, I've got a kind of a follow-up question based on the poll we had, actually. So, the question is, while customers may report they would switch banks if communication expectations are not met, in reality, switching banks is a very painful process for the consumer. Banks remain sticky due to the difficulty switching. Things would have to get really bad to go through that challenge. And our listener is asking for comments from the panel on that. So, Richard, you want to take that one first?
Yeah, I think I can dig into the research a little more as a follow-up and probably answer that a little better. But I do think that with the noise from obviously the neobanks and fintechs and things like that that's happening in the system, and the ease of the experience of onboarding that, I think it may not be necessarily a wholesale switch, but it may erode over time because certainly the question is a good one, that they are sticky, but becoming less sticky because of the ease of use of some of the more modern banks that I've seen. Just the onboarding process, the transfer process, et cetera. The last account I opened was pretty seamless and pretty easy. So from my perspective, I'm kind of migrating over time versus all at once, and it's not as hard as some might think. I'd be really curious, especially Rick, given your background, your comments around that.
Yeah, I point to my 20-year-old. She's like on her third bank. I think don't lose sight of the generational aspect as well. Two 50-year-olds talking about stickiness of banking platforms versus the next generation of how banking and banking relationships are going to evolve to the point that Richard's making. I mean, most neobanks and startups, they'll do all the switching for you. So it's a great point, I think, for probably a market segment that we can all kind of relate to, but there's other market segments that could switch pretty easily. And how you handle digital communication is fundamental to the service you provide. So I think about it from a variety of different contexts, but certainly understand your point.
Great points. Yeah. All right, cool. So we're getting close to, I think, the end of our program here, but I think I can slip in one or two more questions. Richard, what are the technologies that you think will transform the way companies communicate in the coming years?
Yeah, good question. I think one of the things that, as I've gotten exposed to the Precisely family after the acquisition of Cedar, that I didn't have, that much exposure to was personalized interactive video. So I think that's been really interesting across our client base, whether it's financial services or insurance, or whether it's, lending, mortgage, et cetera. There's some really interesting use cases around, product explainers or next best action. Maybe you're trying to explain a complicated CD ladder or something like that. There's some really key stats here. I'll just share a little bit with you that, in this personalized interactive video, since TikToks of the world and people are watching Instagram videos all the time, I fall trapped to that too, just like a lot of people do. That channel, I think, for financial services is untapped. So we are seeing a lot of adoption around that with some of our banking clients. And to the point of that, some key stats: a 55% email open rate, click-through rate of 46%, 75% completion rate, and I think this is staggering, a 6+ minute average viewing time. So I think if done well, it can have a lot of relevancy, especially with how people get distracted very easily, and ultimately a video that's very personalized to the recipient about their specific situation, leveraging the data like we talked about here, can really add a lot of value to the experience.
Excellent. All right. Let's see. Next question. Do Precisely and FIS have integrations in place to accelerate these types of initiatives?
I'll let Rick take that one.
Yeah, we spent a lot of time, firming up standard integration patterns between the platforms, and we've got a few standard ones that we've been able to leverage on multiple implementations. So yes, and we are trying to standardize that across our very portfolio that we're working together on. We work with other folks besides Precisely. Precisely works with other folks besides us. So we have to be fungible and flexible in how we do integration, but we absolutely do integration with the Precisely's communication platform and our modern banking platform.
Yeah, and there's deep integration, just to build on what Rick said, with the modern banking platform among some of the other platforms at FIS, and like Rick said, elsewhere too. So the key is having open architecture, so you get the flexibility to tap into where you need to tap into for whatever services you need to support. Because like we talked about, sometimes it's not a big bang approach where everybody flips a switch and moves to one provider or another. So there has to be flexibility around the edges from an integration perspective.
Interesting. Thanks. Here's another interesting question to the audience. Thank you, everyone, by the way, in the audience for asking all these great questions. So legacy bank processes are still dominated by internal email communications to complete sales processes. What is the best solution or technologies to move away or capture email communications?
So, I'll take that. Sometimes, we see that, around the internal email piece, with this particular topic, we're talking mostly external, but we do get asked some of these questions here. So there is ways to capture, internal emails across what was described here, so that organizations can kind of, one, archive things consistently, see what's happening, have a, kind of a trail from end to end with whatever issue they're trying to work on. So we see that a lot with workflow. There's some workflow capabilities around kind of capturing that as well, that we've seen be super helpful in kind of that visibility and what this particular question is getting at. I don't know, Rick, if you have any comments on that or not.
Well, we didn't talk about and haven't talked enough about AI. I think being able to interpret and look forward to some actions associated with emails is probably something that needs to be given some thought. I think there's a substantial opportunity to be proactive with email communications from an AI point of view. I mean, think about Chat GPT and what's being rolled out in the market now. I can't imagine we're far from being able to interpret emails and give canned responses to meet product and pricing needs, to be able next best action needs, to be able to resolve issues systematically behind the scenes. So I feel like it's coming. I don't think technology is going to be an inhibitor. I think it's banks willing to adopt and put those things in place that will be that will cause the slow adoption of it. Just a thought on that point. I like the workflow concept. I mean, I think obviously workflow and routing is key to be able to manage email communications both internally and externally. Because I get a lot of email.
we all do.
The understatement of the week.
Yeah.
So excellent, fantastic, gentlemen. I think that is a great note to end on. I want to thank you both, Rick and Richard, for being here, and a very important topic. Enjoyed digging in on it with you, and of course, everyone in the audience for being here. Thank you for your time. Thanks for those questions, for participating in the poll. We will be sending you a follow-up email in the next day or two that'll have a link to a recording of this event as well as the slides themselves. You can dig into the content again at your leisure in the future. Some good stuff here, so I encourage you to do that. And with that, I think I will officially wrap it up. Wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon. Thanks so much.
Thank you.
Thanks, Mike. Thanks, Rick.